I'm going to teach you the proper way to pay yourself with your LLC. If you're set up properly, the process is really simple. All you have to do is transfer money from your business bank account to your personal bank account. Once the money is moved, you can then spend it on personal expenses. No, this process is not taxed. You don't have to pay extra taxes if you do this often. But this is the proper way to pay yourself using what we call an owner's draw. Look, I need you to understand something here. The IRS views you and your business as one entity. Any LLC owner that hasn't made the change to S Corp, C Corp, or partnership all gets paid like this. This is the proper way to do it because we don't want to commingle assets. We don't want to mix business money with personal money. That's a big no-no. But Evan, how do I transfer it? It's a great question. I like to use a simple bank transfer. I log into my credit union's website, I click the transfer button, and then I type in the bank account that I'm moving the money to, which is my personal account, and I hit submit. That is the easiest way to do it in my opinion. You can also do ACH, which stands for Automatic Clearinghouse, but I don't recommend it as it's kind of slow. The second best way to do it is to write yourself a check. Literally take a business bank account check, address it to yourself, and then go cash it or mobile deposit it with your phone in your personal bank account. Please do not pull cash out of your business bank account and then go deposit cash in your personal account. It's not a good way to keep track of things, and it could cause you problems come tax time or if you have to go through an audit. The last option is to use something like Zelle. If you have a separate phone number for your business and one for your personal, you can do that too. But what if you don't have separate bank accounts? What if you only have one bank account? In order for this to work, you have to be set up the right way. Let's talk about how to properly set yourself up so that you can follow the rules and make sure that when you pay yourself, it's easy, smooth, and the IRS is going to say, good job. Lots of people get LLCs without setting them up properly. I'm not saying that's you. I just want to go over the proper setup so that we can be clear on the right way to do things. The proper way to set up an LLC is to first open an LLC with your state. That means you need to file articles of organization. I have a video on how to do that right here. The next thing that you'll want to do is get an EIN for that LLC. Your EIN is your employer identification number. You get that from the IRS and you tie it to your LLC by typing in the same name as your LLC when you apply for the EIN. It's important to remember that the LLC is still a part of you as a person and you are still part of the LLC in terms of taxation goes, okay? Opening an LLC doesn't change your taxes. Now, once we have the paperwork from our LLC filing, which is called your Articles of Organization, and once we have our paperwork from our EIN filing, which is called your tax ID, you can take those two things and open up a business bank account. I like to use local credit unions, but Chase and online banks like Mercury are also a good option for you. Opening up a business bank account is the step that separates the real business owners from the side hustlers. It's the thing that really makes a difference when it comes to owning, operating, and being in compliance with your business. Once you have your business bank account set up, you gotta start using it. I want you to think of it like this. Because you formed an LLC, you have now formed a separate business. Even though the IRS looks at you the same, it doesn't matter. You formed a separate business now. It's got its own bank account, and you, as a person, have your own bank account. Personal expenses come out of your personal bank account. Business expenses come out of your business bank account. So before you spend any money on anything, moving forward for the rest of your life, I need you to ask yourself this question. Is this a business expense or is this a personal expense? They're two very different things. Business expenses are anything that you need to spend money on that is regular and necessary in order to operate your business and make money. Personal expenses are just that. They're expenses that are for you personally. Clothing, toothpaste, groceries, diapers, your mortgage, things like that. The same goes for income. When you make money with your business, it needs to go into your business bank account, okay? No longer are you going to be making deposits into your personal account. The only times you're going to be putting money into your personal account is if it comes in a transfer from your business bank account in the form of an owner's draw. We don't put money from our business in our personal account anymore. If you get a birthday card from grandma, yes, you can put that $100 check into your personal account. But everything else, everything that's generated by your business, it needs to go into your business account first. That way, when we have expenses come out of our business account, we're able to balance them out. Let's say you made $10,000 recently and you put that in your business account, but you had to spend $7,000 in order to make that 10 grand. Well, you're gonna have $3,000 left over in your business account. That was really easy math. We know that your profit is $3,000. and you can transfer that profit into your personal account and now spend it on whatever you want. But if you want to use that $3,000 to spend on business expenses, let's say you want to buy a new cell phone, or you need a laptop, or you have to pay rent for the office that you're renting, or you need to buy supplies for another job, you'll still want to use the money in your business bank account. Whew. Evan, thank you so much. That helps a ton, but I'm still confused. Won't I have to pay taxes each time that I move the money in between accounts? The short answer is no. Let me tell you why. The IRS looks at you and your business as one entity, one machine that generates cash and pays taxes. And it stays that way until you tell the IRS to tax you differently. And that's a really big distinction. The only time that you tell the IRS to tax you differently is if you have a partnership, you have an S Corp, or if you have a C Corp. Those are the 3 times in which you would tell the IRS that you're paying taxes from your LLC differently. Otherwise, if you're just a single person and you own an LLC, you're taxed as a sole proprietor. And a sole proprietor means you're taxed as a person. Well, guess what? You're a person. Okay, so all of the activity that happens within this business bank account and this LLC, it's all going to end up on one tax return that you file as a person at the end of the year. The only time that changes, just to reiterate, is if you change your tax status. But don't worry, we're going to eventually change our tax status. Let me explain that really quick. When you get to $50,000 or more in profit for the year, it makes financial sense for you to start being taxed like an S Corp. An S Corp stands for small business or subchapter S. Basically what it does is you tell the IRS that you're ready to level up your tax game. You're ready for those tax breaks as a small business. And in order to get those tax breaks, you're going to start doing small business stuff, payroll, distributions, meeting minutes, compliance. We're not there yet, and we'll talk about that in another video. I just wanted to talk about what you should be working towards. But Evan, I own my company. Can't I put myself on payroll and then save some money? The short answer is no. When you own an LLC and it's taxed like a sole proprietor, like we just talked about, you are not allowed to put yourself on payroll. You cannot take a W-2 paycheck from yourself to yourself. And that's because the business is you and you are the business. If that sounds confusing, that's okay. The time that we'll want to start taking a paycheck from our business is when we graduate to S Corp at $50,000 or more in profits per year. The last thing that I want to touch on is this. The IRS doesn't care how you make your money. They just want to get paid their cut at the end of the day. So it's your responsibility to tell the IRS how much money you've made in profit. That's why we keep things separated. It's a lot easier to figure out your profit when your business account is separate from your personal account. So do yourself the favor, keep things separated, don't commingle, follow the rules, pay yourself like I talked about in the beginning, and you are going to be on the fast track to success. If you like learning about this type of stuff, I have an accelerator program linked below in case you want to check it out. Otherwise, I suggest you check out this video next because it will explain a lot of what I just talked about in greater detail, and I think it will help a ton.